The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, in a move that could reshape how digital assets are treated in traditional finance, the Federal Housing Finance Agency, under the Trump administration, is working on a policy that would allow borrowers to include cryptocurrency as part of their mortgage applications without having to convert it to cash. Now, it's a potentially historic shift. For years, crypto has been left out of underwriting frameworks due to its volatility, lack of regulatory clarity, and the challenge of verifying reserves. Now, with Fannie Mae and Freddie Mac under directive to explore this integration, the question is, why now, and what does this mean for crypto itself? Well, to find out more, joining me in the studio is Valentin Fournier, who's a digital asset analyst at BRN. Valentin, welcome back to the show.
Very happy to be here. Thank you for inviting me.
Thank you so much for joining us. Well, Valentin, the Federal Housing Finance Agency is working to let borrowers use crypto as part of their federal mortgage applications without converting it to cash. What does this mean in practice, and why is it such a significant shift?
So traditionally, only cash, stocks, and bonds counted toward your financial strength in mortgage application. Now crypto gets a real seat at the table, and this is a big deal because it marks the first time U.S. housing finance giants like Fannie Mae and Freddie Mac are being told to treat digital assets as legitimate reserves, reflecting crypto's growing role in household finances and mainstream acceptance.
Well, historically, cryptocurrency has been excluded from underwriting frameworks due to, volatility, regulatory uncertainty, and the inability to easily verify reserves. So what's shifted in the landscape to make this rethink possible now? Is the market ready for this?
So three things have changed. First, there is a growing acceptance. Crypto and especially Bitcoin gain legitimacy as a treasury asset thanks to ETFs and companies like Strategy. Then there is a better oversight. Only crypto held on U.S. regulated centralized exchanges will count, which will make it easier for lenders to verify and track the assets. And then lastly, there is a political will. And the directive aligns with a broader push to make the U.S. a leader in crypto innovation, as outlined by the current administration. And then while the market is more mature, there are still concerns about volatility and risks. So this is a cautious first step rather than a full embrace.
Okay. Well, then how might the inclusion of crypto in mortgage applications affect how, institutions view crypto's risk profile, especially given its volatility?
So institutions will need to adjust how they assess risk. Crypto's price swings mean lenders will likely apply discounts or require more documentation to offset potential losses. Then the Federal Housing Finance Agency has instructed Fannie Mae and Freddie Mac to develop systems that factor in crypto volatility and ensure it doesn't undermine the stability of mortgage lending. This could lead to stricter guidelines or caps on how much crypto can count towards your reserves.
Well then, Valentin, does this move signal a new era of crypto integration into traditional financial infrastructure?
While this is a big step, it is not revolutionizing crypto integration yet. Only a limited number of assets will be included, and strict regulations will be necessary to avoid a replication of the subprime crisis. Also, this can only be seen as a continuation of Bitcoin evolution toward a respected treasury asset, and the new era is more likely to come when a widespread use of crypto will finally reach the market.
Right. But how has the market responded so far to the FHFA's announcement? Are we seeing any movement in crypto prices or trading volumes as a result?
So initial reactions from the crypto industry have been positive, with increased optimism and some uptick in Bitcoin interests. And while this could be a turning point for Bitcoin, there hasn't been a dramatic surge in price yet. Markets are likely waiting to see the details and how quickly these changes are implemented before fully pricing in the news.
So once we see all the details and we see more clarity into this, do you think this policy change could fuel a bullish narrative for crypto, especially for Bitcoin or even stablecoins?
Yes, this policy could potentially strengthen the bullish case for crypto, especially for established coins like Bitcoin and regulated stablecoins. By making crypto more useful in everyday life, like buying a home, it adds real-world value and utility, not just a speculative appeal. And also the impacts of the avoided taxes on capital gains make it very appealing for long-term investors.
Just focusing on stablecoins as well, could this spark a push for more stablecoin usage since they, offer less volatility but still fall under the crypto umbrella?
Definitely. Stablecoins, which are pegged to the US dollar, are likely to be favored by both borrowers and lenders because they offer the benefits of crypto without the wild price swings. This could encourage more people to hold and use stablecoin as part of their financial planning.
Well, overall, Valentin, could this create a new wave of use case demand, especially among, U.S. retail holders looking to buy property?
Yes. Home buyers who hold crypto may now be more motivated to keep or even grow their digital asset portfolios, since these assets can help them qualify for a mortgage. The long-term horizons of real estate and Bitcoin buyers are a great match, which could drive new demand and practical use for crypto among everyday Americans. And more than demand, it will also drastically reduce the need to ever sell the assets for Bitcoin owners.
And could this move then drive more liquidity towards centralized exchanges? And what does this mean for, market dynamics or even decentralization?
So since only crypto held on U.S. regulated centralized exchanges will count, we may see more assets move from private wallets or decentralized platforms to these exchanges. This could increase liquidity and transparency, but also shift some power away from decentralized finance, at least for those seeking to use crypto in traditional finance settings.
In the long run, do you think this move could affect how crypto is valued? I mean, not just as a speculative asset, but as a usable financial instrument tied to real-world assets like housing?
Over time, yes. If crypto becomes a common part of mortgage application and other mainstream financial products, its value will increasingly reflect its utility and integration into the real economy, not just speculation. So this could lead to a more stable, mature market and a broader range of financial products built around digital assets.
Some great insights from you there. Thank you so much, Valentin, for joining me today.
Thank you very much.
Thank you. That was Valentin Fournier, who's a digital asset analyst at BRN. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.